Happy Friday, traders. It is Friday, March 11th, 2022. We're looking at our final cherry bomb of the week. It's in gold mining, GDX. We're looking at liquidity rank of 4 drops out of 4, an IV rank of 74. And the trade strategy sent to us is a Strangle, but I'm going to offer us up an alternative. And you can tell me which of these two strategies you find most interesting, if you would do one at all. Love to hear from you in the comments below. Let's get going with today's trade, shall we? Everybody, my name is Neil. This is Option Theory. Thank you so much for joining us. You can see that I've got my buttons all messed up. Normally we go full screen. There it is. All right. So I also normally like to pre-cook our trade ideas and so that I can move faster. So I'm going to build them on screen today. So there that is, except for I do have the alternative pre-built in Tastyworks behind this. So you can see we're in Thinkorswims right now, simulated trading. I like to do that so that we can get all the learning without any of the risk in case you're new to trading, or if you just want to try out different theories without having to worry about risking real dollars. So you start to build this experience so that when you're ready to risk your real dollars, you've got that behind you. All right. And hopefully you'll subscribe to this channel someday, if not today, and you'll have a trading partner. Love to hear from you. This doesn't have to just be me talking. All right, let's go take a quick look at the charts for GDX. You can see naturally with all the volatility, we've seen a spike in this price. The question is now that we've hit, the 52-week highs, the high recently, right? So then we know, it's time to wonder if we should be bearish. Now, I don't know that we're going to be, dropping like a rock. I feel like we could sustain some level of volatility for a while because this doesn't seem to be ending right quick. But the trade idea, as sent to us, will be neutral. So let's take a quick look at that. And here it is. We're going to be in the April 14th week. Nope, that's not right. We're going to be in the April 22nd weeklies with 42 days to expiration. You know how if you watch the show at all, you'll know I'm not a big fan of the weeklies. Mostly because of open interest and wider bid-ask spreads, though 5-cent wide bid-ask spreads, not awful. I'll give you that. But 9 open interest, that's not amazing. So 33.5, also not awesome because it's not an even number. It would be harder to roll because that strike may not be there and the time that you need to roll it to. So management's a little bit, if I was going to do a Strangle, I would most likely move it to an even number, 33, 34, right? Not a decimal or a floating point for you coding geeks, right? All right, so 16 delta is pretty close. This one is close to the Tasty Trade mechanic. Let's put it in as it was sent to us and come down here to the 46 call. There it is. I'm going to hold down the control key and click on the bid for that. So that allows me to build a custom trade here, a Strangle. $9 is the credit we would receive according to Thinkorswim. And let's go see what the probabilities are for a trade like this. Now, naturally, I'd expect them to be pretty high because it is unlimited risk. Let's go to April 23rd. Where did I get that from? Right here in blue, April 23rd. Now I'd like to get my goalpost set up to the break-evens. We can see that we actually would be slightly bullish on this one. So let's go ahead and, although it says negative delta, I find that hard to believe, but okay, sure. Set slices to break even. There we are. There is our goalpost, as I like to call it. 72.2% probability of ending up in a profit zone at expiration. That's pretty good. All right, let's go ahead and take a quick look at our confirm and send screen. You can't see that, so let me show it to you now. There it is, $109 of maximum profit and a maximum possible loss of infinite. That's because we're short on the call side and we could lose tremendously, infinitely, if the stock for GDX were to go up for whatever reason. And that does not sit well with me. I don't know how well it sits with you. So that's why I've cooked up an alternative. So let's go take a look at that alternative. All right, on screen you can see now we're inside of Tastyworks, and I'm going to drag this guy in on the right. There we are. And what we're looking at here is what Tastyworks likes to call a Jade lizard. And that is really just an iron condor on the call side, or I should say a short call vertical with a short put, or, it's like an iron condor, except for you're missing the long put on the side. However you want to look at it. But the nice part about it is you try to build them such that you collect enough credit between the call spread and the short put so that it covers the width of your short call spread and then gives you zero potential risk to the upside. So here we are, we're looking at a $110 of maximum profit, similar to our maximum profit in the Strangle, an 81% probability of making half of this credit, and a pop of 77%, or probability profit of 77, which looks pretty much like a little better even than the 72% that we had with the Strangle. So we still have a decent amount of capital requirements here. Our maximum loss is still $3,500 minus the credit we would receive of 110. So it's not, as capital efficient, I suppose, as your defined risk. But I think this could be something that many of you could potentially put into your portfolios, depending on your account size, of course. And it's definitely if you're doing simulated trading. So let's go ahead and build this. What do we have? 42, 41, and 35. Let's go ahead. I'm going to delete this trade. And let's go over here and build out that Jade Lizard here. 41, 42, I believe it was, we said. I just lost it. Hang on, yes. 42 is the long. Okay, now I'm going to switch back over to Thinkorswim. 42, we are going to buy. 41, we are going to sell. And then I think it was 35 was we're going to sell. So that has us what they call a custom. Let's go ahead to the risk profile on this one. There it is. We're only going to have one break even. I hit the wrong spot. Thank you. Let's go to that expiration. We're only going to have one break even, and I think it's good to visualize. Take a quick look here. Set slices the chart. This is the line, this red line here is where we don't want GDX to cross because that's our break even point. So it would be potentially worth it to come back to this and see, all right, if the trade mechanic is to cut the trade off when you get to 2 times the credit received, a loss of 2 times the credit received, all right, that would be a loss of $220. So that would put us right here-ish. Let's call it 32. Right, it's not quite 32 for sure, but you could set an alert for if GDX gets to 32, right? Then you could set an alert to say, oop, time to close. That would be one potential way to help yourself stay alert on a trade like this. So we go to the charts and we can go to 32. We can choose to set an alert, create an alert. When you can do, I like to do last is at 32, right? Boy, we are doing lots of stuff today, right? That's how you can go ahead and set an alert like this and stay on top of it. I'm not going to go ahead and do that, but I'm going to go back to my Analyze Add Simulate Trade. Right click this, choose Confirm and Send. You can't see it, so I'm going to show it to you here. We're going to look at the $110 of maximum profit, and instead of infinite maximum loss, we're looking at a $3,400 maximum loss on this one. Pretty sweet. All right, going to go ahead and hit send and put that into my working orders. What'd you think? Which one do you find more attractive if you were going to do either of these 2 trades? You may not do any of them, right? Because this is all educational. But if you were going to do one, I wonder which one you would pick. All right. Thank you so much for making it to the end of this video. It does help me so much when you watch the end of these to the end of these videos. And thanks for watching to the end of the week. Big thumbs up to you. Yay. All right. All right. I look forward to seeing you guys next week and maybe seeing you in the comments. Until then, may the market be with you.